Well, thanks so much for tuning into this special broadcast with me and Menka, who is also a part of this conversation. And both of us will try and make some sense of what does this look like. Menka, it's a bit of I mean, I know we kind of at times rubbish levels, but 13,000 is special in the light of the fact that it's happened in a COVID year, isn't it?
Neeraj, this is a very confusing conversation. I thought I was going to open it and chuck the question to you. 1,000 points in 12, in what? I think 1,000 points in approximately 12 trading sessions. I mean that's been one way upwards ride in the last few days. An incredible recovery in a pandemic year, and thanks to all that money that's coming in from across the Atlantic.
Yeah, so actually, so two, three very pertinent points. I was just looking at the dates, Minka, while we're just preparing to go on air. 2 months ago, 24th September, we were at 10,800. 1 month ago, 23rd October, we were at 11,900. So we've kind of done approximately 1,000 points a month in the last 2 months. So it's been actually pretty stellar in that fashion. And you mentioned flows, Minka. My math suggests I'm missing a day, but my math suggests that. For the rest of the days in the month of November, we've done about 49,700 odd crores in terms of inflows. I'm presuming the day that I've missed, which is 2 or 3 days ago, it would have easily have been 300 crores from the FI side, if not more. So we actually done northwards of 50,000 crores in the current month itself, which would be highest in, I think, at least 2 decades, if not more. So, I mean, don't argue against the money for sure. I think that's the lesson right now.
And I think the point here is also that, with the Biden administration on its way in the US, and last night we had news potentially as Yellen being the Treasury Secretary, there is a broader expectation that, a lot of the easy monetary policy in the US will now also be backed by fiscal policy. Of course, I'm not getting into the politics of the House and whether they'll have the numbers to move some of the stimulus bills to the size that they had anticipated, but at least there's more optimism that there will be more money unleashed to help recover the American economy, and that some of it will find its way into asset classes across the emerging world.
Yeah, and I think that's what all the people who have spoken to us, who look at the global picture, Menka, I mean, right from EM Capital Advisors, Jitu Punjabi, who spoke to us a few while back and said that just look at that picture steadfastly and don't look around some of the other pockets, or Rhythm when he spoke to us on Sal Mubarak. And he said that these flows are not necessarily EM dedicated, but India dedicated flows. And that's a big statement, right? Because the money won't just flow back if EMs kind of take a bit of a pounding. So going looks good. And just one quick point I would like to mention here, Minka, I never quite believed in that, but then I did some fact checking. Almost every single point of time, when the FIs have pumped in large money, one, of course, that the markets tend to do well. It was seen in 2014, the first 6 months. It was seen in 2019, the first 6 months, and it's being seen right now. But also that BFSI somehow tends to do really, really well, maybe because of the higher weightage. But BFSI does back. And the last few points, the 1,000 points, has been entirely about what banking has done, isn't it? I mean, just look at what BFSI has done, and I think the commentaries from companies as well, Menka, as we've analyzed in quarter 2, seems to suggest that positivity is looking strong. What did you think of it?
Oh, well, yeah, Neeraj, I've reserved comments so far on corporate commentary, though the earnings season has surprised us on the upside. But, one of the concerns has been how much of this has come from pent up demand, which is maybe not sustainable over a period of time. There's the festival period as well to factor in. So much of the profitability or the improvement in profitability, let me put it that way, has also come from belt tightening across the large corporate universe. And whilst that's great for those particular companies, we're not yet clear what the broader impact on the economy would be when you start cutting costs or cutting suppliers, etc. So I'll reserve comment from that point of view, except to say that yes, Q2 has been far more encouraging than I think anybody anticipated. But here's the question I want to put to you. You look at this market, yes, don't argue against the money, but how narrow do you think this market is, or do you feel that the recovery in the indices and across the broader markets has been sustainable? That's one. And are you concerned about valuations at all?
So uh, I was also referring to the Goldman Sachs note the other day, Minka, and the Credit Suisse note, which we published on our site. So yes, on parameters like PE, which everybody usually uses, uh, we are probably a couple of standard deviations above mean. and that is not usual. That is a bit unusual. But I think everybody agrees unanimously that this is during a depressed earnings period, and therefore maybe PE may not be the best multiple, or at least the current PE might not be the best multiple. Look at the PE in a normalized year, which is probably a year and a half out, or maybe 2 years out, and we don't look terribly expensive. Yeah, this is the chart that we mentioned yesterday on the trade setup as well, that the valuations are expensive, couple of standard deviations above. But hey, if the earnings growth picks up, then you never know. Now, this is a hope, Minka. I know, as all of us will agree, that it's been elusive for such a long time. But quarter two, for the first time, beat the depressed estimates, but beat them nevertheless. And therefore, maybe there's some hope. Of course, the bedrock is liquidity. But I think the commentary, even if it's pent up demand, is looking slightly positive right now. So don't argue against the trend or make the trend your friend, seems to be the mantra right now.
The breadth of the market, Neeraj. I know you spoke
Yeah,
of BFSI
sorry.
and the Nifty banks run and how that's fared over the last several trading sessions. But the breadth of the market into smaller sized companies.
Yeah, so that's probably the Achilles heel right now. But I mean, it started to broaden off, of course, and it would. I mean, at 10,000, it's a separate case in point, but at 13,000, of course, the things will improve materially from what it was at 10,000. So I think it would be fallacy to compare the breadth currently versus breadth at 10,000. But yes, we could do with some more broadening of the breadth for sure. I think it's picking up a bit, and maybe that is something that everybody's looking at. We were speaking to Ambit Asset Management the other day, and they said, "Okay, don't look at the Nifty at 13,000. Look at the broader markets, and they are not looking as expensive, so they are fishing at the broader end of the spectrum. Plus, with these whole changes to the rules, etc., even though SEBI's given the flexi cap category option to mutual funds as well, but maybe, just maybe, we might see further broadening of the markets as well, because people are now starting to fish. Minka, just one last statistic, at least from mine, and then I want one question off you. Just one last statistic. Across the universe and even in India, the last 3 months, value stocks have beaten growth stocks, which seems to suggest that value and therefore the market breadth is making a comeback. The question is, can it last? Just one quick thing, Menka. And do you reckon at all, in any fashion whatsoever, that aside of corporate commentary, there is something else that people should be watching out for? I mean, I know there are a couple of things that have been done, right? This whole yesterday, the RBI announcements on Friday, and I think Raghuram Rajan and Viralacharya came on a scathing attack, etc. Not that it has a direct, immediate relevance on the markets, but all of these kind of play a part. Or the global picture, because I heard you mention Janet Yellen, and she was the original loose monetary policy person, so to say, right? In that sense.
Well, no, I don't think she was the original. I think Ben Bernanke, and I think the circumstances around the global financial crisis, and the coordinated central bank action across the world in response to that are circumstances that have continued to prevail over the last decade or so. And in fact, they've only been heightened over the last year as more Western countries have come together to pump money into their economy, or Western central banks to pump money into their economies to help sustain a recovery. I mean, it's a very complex situation, and I don't want to get into it in this quick conversation this morning. Look, I think, Niraj, maybe one of the other contributing factors, and I know opinion here is very, very divided, but there is a very large group of people who believe that in the last 6, 8 months, the means notwithstanding, the effort by the government to announce certain reform measures, if I can use that word, for instance, when it comes to labor or it comes to farm, indicates an energy and a momentum in helping modernize the economy in areas that have otherwise not yet received that modernization touch. There's a lot of debate, so I'm not suggesting that this is the consensus view necessarily, but many people have been encouraged by the energy that the government has showed. Equally, on the other side, there are those who believe that in response to the short-term crisis of this pandemic, the government should have been able to spend more, but having maintained fiscal discipline is also a compliment to the government, according to many. So since you asked me, are there any other contributing factors? I'm wondering if the market is looking at all of these in a complementary style. That said, I think, when the going's good and the going's up and the money's coming in from across the Atlantic, it wouldn't
Yeah.
matter what the government did unless it messed things up dramatically, right? Everything is good when things are moving up, right?
Yeah, I think that's the central picture. I mean, right now, don't argue against the flow, Minka. And let's see. But yeah, I somehow, I mean, I don't know. I remain hopeful. I know what you mentioned is right. That let's not kind of call it great days, but let's reserve the commentary on corporate performance. I think the commentary from companies seem to suggest that maybe growth could be better in quarter three and quarter four, at least quarter three due to the festive season, and hopefully that'll add to the positive data that we need.
Yeah, well, I think it depends on what you're looking at, right? Are you looking at quarter on quarter, which is sequential performance, or you're looking at year on year? And in some cases, you will likely see a big recovery quarter on quarter, but not necessarily year on year. We'll see it as it goes. One last word from you, Niraj. I think we opened April to September, if I remember correctly, some 60 lakh new demat accounts, right? So a large number of new investors have come to this market during the course of this pandemic, either because they were bored sitting at home, or this was one of the few other ways of being able to make some money. They were hopeful to do so. And for them, this is an interesting landmark.
Yeah, I think a lot of people have started talking about why should I invest in mutual funds when equities are giving such splendid returns. Of course, it's not an apple to apple comparison because they are looking at 6 months performance versus SIPs, which have been underwater for the past 2, 3 years. I think SIPs in the last 6 months also would have done well. But the point is, yes, well taken, unprecedented of sorts, the kind of numbers that have gone in for direct investing. And I think Menka, conversation with ICICI Securities after the numbers seem to suggest that October hasn't been that bad a month either. So it's not that people opened the accounts then and the flurry died down as soon as people started going to work. October has also been apparently a pretty good month for direct demat accounts opening. So yeah, direct investing is certainly adding to the flavor for sure.
Is the consensus mood in the market, Neeraj? Final question. Broadly towards a smooth one-way ride up from here, because I do remember last week we were reporting upgrades by Goldman Sachs, Nomura for Nifty targets, not just for the end of this year, but for 2021 calendar year as well.
Yeah, shameless plug out here, Minka. Please read a piece that we've just written on the website. It says Nifty at 13,000 now. What? Shameless plug. But let me do that nevertheless because it does start off with this whole piece about how the common refrain seems to be that the market is overheated and could cool off. And it could well. I think the argument that most people are making and most investors, most large houses, Credit Suisse, the note that we wrote yesterday, Goldman Sachs, as I said, Rhythm, or anybody else, is that because of the flows that are going on right now and because of the other factors, I mean, one is liquidity, two, the fact that growth might be picking up, and let's assume that it is from on a quarter on quarter sequential basis, and FY22 will have the advantage of a low base of FY21, and therefore growth in that sense will anyways look good. So at least the sentiment around the print will continue to look okay. The going doesn't seem to be too bad. If there is a dip, maybe it should be bought into. That seems to be the common consensus.
Okay, so as you shamelessly plug the website, let me do the same. You will see on BloombergQuint.com stories that talk to you about the journey to 13,000 for the Nifty, that tell you what some of the targets are. For instance, Goldman Sachs upgraded India's rating to overweight just last week, revised its target for the Nifty to 14,100 by the end of 2021. Morgan Stanley has hiked its target for the Sensex to 50,000 by the end of next year. Do remember, when things are bullish, everyone speaks the same language, which is bullish. So be careful of that for sure. And we've all day coverage going on here on Bloomberg Quint. And I think sort of one final note, one of the experts, market experts you were talking about in the earlier part of our conversation, Niraj, I had a conversation with him last night on the economy and markets. And he said to me in Gujarati, Menka teji che, don't ask any questions. So I suppose teji che is the right response to end this conversation with.
Yes, indeed. Cross fingers, may it continue.
All right. Thank you very much for tuning in. Like I said, the coverage on the markets and the corporate economy continue here on Bloomberg Quint.